말했잖아 얘들아. 기다려. 안 팔 거야. 내 스타일 알지? 안 판다. 아 씨발 좋됐다. 아 여기는 올라갈 것 같아.
그만 좀
진짜 1초네.
Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the whipsaw action on the charts, which is just a fancy way to say up and down, right? And so, guys, we are seeing just some dramatic changes in some of the prices for the coins that we're trying to front run any potential pump or dump. And of course, overall, in the charts, we're pretty much where we were yesterday, as the Fed pretty much did what was expected from the market, which is increase by 75 basis points, right? Which 80% of the market believed would happen. Now, I had suspected, and what the Fed had been building up to was the concept that the Fed might, invoke its inner Volkner, right? And then by doing so, raise interest rates 100 basis points in order to really squash inflation this year, and then everything else can pretty much, be understood as just tapering off from there. However, Jerome Powell and his little council there didn't find their courage. But what they did find the courage to do is say that they would continue to increase interest rates throughout 2023, which is pretty much expected since they didn't take care of the issue over the last 2 years when they were causing the problem themselves. And so, guys, I don't know what to say. There's red on the charts, right? There's blood on the street, and nobody is too happy. But I will point out one thing that's a little bit ironic, and some of you may appreciate this, but Nvidia is one of the very few green tech stocks today, and it was called by Jim Cramer yesterday. Let that sink in, Alpha Fam. Let that sink in. Okay. That's the kind of week that follows a quadruple witching, right? Last Friday was the quadruple witching. Historically, after a quadruple witching, the market finds a low, right? Reaches a low prior to the after the quadruple witching. It's lower than when it started. And then, of course, we could pretty much count on Jerome Powell not to be the brave soul he's never been, and to just do what was expected from the market, but at the same time, somehow managed to shake the market, right, in the same breath of his speech. Guys, we did have, of course, that news conference, and tomorrow we'll have some jobless claims. Should be interesting to see the current account deficit. All right, some leading economic indicators. That's good to have. We get some PMI on Friday. But the big news is behind us. 75 basis points. Not decisive either way, okay? But overall, a bearish message. Now, the Alpha Fam understood what that meant for the market in advance because we knew that the Fed is going to have to continue to increase interest rates throughout 2023. And I prepared you that we probably won't see the bottom of the market, at least not a hard confirmation of it, until spring 2023 at the earliest. Okay? And then can we talk about the potential for the market to turn around? We have to be talking about late 2023, maybe even 2024 for a major turnaround. Okay? That doesn't mean there can't be a relief rally, but for a major turnaround, probably 2024. Why is that? Because typically a recovery follows about a year after the Fed makes a pivot. And if the Fed is going to be increasing interest rates through 2023, I think we could expect at least through the middle of 2023, then statistically speaking, the turnaround in the market isn't going to come until 2024, okay? And so that means that 2023 is most likely to be an accumulation year, not a bull run year. You understand what I'm saying? You're following the logic? And so when you saw that huge spike in the chart, it's because Jerome Powell did what was expected. He increased 75 basis points, and the market said, aha, we can just go up from here. But then the market realized, aha, he hasn't really solved the issue, and we're going to be dealing with this probably through the middle of 2023. And so they said, huh. And we didn't really lose our footing. Alpha fam, we've been following this diagonal channel that we've been tracking, right, for the last week or so. And yeah, we had a little bit of a fake out to the upside, a little fake out to the downside during the quadruple witching, to be expected. And yeah, we had a little fake out to the upside during the Jerome Powell meeting, to be expected. But look at this. Look at this. Look at the momentum zones that we had worked out, right, prior to the Jerome Powell meeting. And what do we say? You have to close a candle, a couple significant candles above that momentum zone in order to recapture your momentum to the upside. And did we do it? No, we didn't close any candles to there. Yeah, we got this pump, but it immediately turned around, right? This is essentially the same move, okay? I'm on the 2 hour. You look at the 4 hour, and it's just a wick, right? It's just a wick that just like flinged up there really quick and then like came down. Really, for a significant candle like a 4 hour, we didn't even close outside of our channel. Thank you, Jerome Powell. So where were we yesterday? We were right here. Where are we today? We're right here. What I say would happen if we had 75 basis points as an increase? I said most likely just sideways action. We're literally the same price as we were when I made my video yesterday. Okay? And all of that roller coaster, all of that headache that the Korean trader, experienced, right, in its full emotional glory, was all for naught. And by the way, Alpha Fam, if you get an amazing pump and you start seeing pressure wicks to the downside, you may want to take your profit, right? You may want to take your profit. Always be selling, always be taking your profit. Put food on the table. Don't be loyal to these coins. These coins aren't going to be loyal to you guys. Okay? Be a clever little alpha monkey and take your damn profit. All right? Don't just allow yourself to be liquidated, right? In these markets. It's crazy, guys. Like, why wouldn't you take your profit? After a huge pump, why wouldn't you take your profit? Right? Especially you're on leveraged positions, right? You're using size. I mean, come on, take your profit. And these momentum zones are no joke. If you're not holding a candle there, right, you lose your momentum zone. What's the reason I put it here for, right? That's going to dictate whether we have continuation to the upside. The most probable likelihood of continuation to the upside is only if we can hold above these momentum zone levels. We don't hold it, we fall under it, you might as well get out because you're basically under where you need to be, right? And let's go ahead and take a look. Let's take a look at our good old EMAs. All right, all right. Let's look at the 1 hour here. What was this even trading on? The 15 minute? Let's say the 15 minute. All right. You see a squeeze play like this, all right? You can just get out. You can just get out. That thing's gonna continue to squeeze to the downside, right? So we've been practicing our EMAs over here at the Alpha Commission, right? You guys know what I've been teaching you about the EMAs. If you're having price action that is moving this dramatic on the 15 minute, maybe even the 5 minute, because it's moving so dramatically on the 5 minute, you got to have your time frame, right? Match the price action. You can't just, I mean, you could sit back and try to swing it, but, in volatile conditions like this, very perilous, right? So if you're actually trying to capture these moves and you're having 5 minute candles that are just mooning and dumping and mooning and dumping, then you're going to want to watch these EMAs. You had a squeeze here, you could get out. You had a squeeze here, right? You could get in, right? So you didn't get the absolute bottom, you didn't get the absolute top, but you grabbed that chunk in the middle, and depending on your leverage, well done. You got a trade, right? These guys, they just try to get everything, right? These obsessive gamblers, they just try to get every move. And if we look at the 2 hour, which had these nice, beautiful candles, right? You saw that we basically pushed to the 200 and then got rejected, right? So if you're seeing these type of beautiful candles like form on the 2 hour, and then you get a turnaround, right, on the next 2 hour candle, well, maybe you're operating on the 2 hour, and if you see it, you're at the 200, that's very difficult to break through a 200. You should probably take some profit there, right? Just common sense, just common sense. Now on the 4 hour, you were just doing this kind of wick thing, so, you're mostly just in this channel down here, right? If you're trading on the 4 hour, you're mostly just in here. So you got to match what you're doing, right, to you got to match your time frame to the candle, to the price action that you're trying to capture, right? I mean, if that Korean trader had his EMAs on and he was obviously trading on the 1 minute, trading on the 5 minute, right? Because that's what he was watching basically. I mean, he was, he could have been looking at the 2 hour candles or whatnot, right? He could have been looking at some maybe 1 hour candle or something. But the price action that was controlling his emotions, which was controlling his position, right? Because he's obviously an emotional trader, right? It was basically on the 5 minute and the 1 minute where you have all this beautiful price action. And you would have known you're significantly over your 9, right? On the 5 minute. So take your profit. It's because the price action's always going to come back to the 9, right? You start getting way below your 9, right? And you're getting this kind of up pressure, right? These wicks, these up pressure wicks, then maybe you could take a chance and get back in on this squeeze. But guys, like this is very volatile trading. Like you guys who are trading on an FOMC day, right, with Jerome Powell, following a quadruple witching. I mean, you guys are brave, guys, right? 4 hour, we made no significant candles above our momentum zone. So what does this look? What does this look like? It looks pretty bearish. It looks pretty bearish. Let's look at the daily. Daily, we're under the 9. We're under the 4 EMA. We're way under our momentum zone. So this looks pretty bearish. I mean, could we bounce from here? I mean, there's a possibility, right? Could we just dump from here also? Yeah, there's also that possibility. We're not showing any strength in our EMAs here. Look at the weekly. Absolutely no strength whatsoever, right? We're way under the 4 even. Way under the 4 EMA. There's no strength here. So are we going to count on some divergences to push us up? I mean, it kind of played out already, right? And then it got thwapped down by Uncle Powell, right? That bearish divergence that we were talking about ended up playing out. We do have a little bit of interplay on the ADX, suggesting the possibility of some positive movement, but that could have just been that up and down action kind of tricking us. Daily volatility looks like it wants to turn around, so probably a new volatility era will be printing soon. What's it look like on the professional exchange? Just flat. Okay. How about the 2-day? 2-day did turn around when we had this dump over here on the 13th, and it is still continuing to expand to the downside. So, or pardon me, contract. Its volatility is contracting while price is going to the downside, right? So it's contracting to the downside. So we could be seeing some type of consolidation or some type of, drop, right, in price. Most likely some continuation to the downside there. We did have a nice bounce off of our oscillators here, but kind of rounding. Very small action. Looks very similar to this. Doesn't look very bullish in my opinion. Stokes is still pointed up. Stokes is still technically pointed up, but yeah, it's crossing over here, guys. It's crossing over. You can barely see it, but there's basically these two dots, right? There's these two dots. There's this little blue dot right here and this little red dot right here. And so this Stokes is projected to be intercepting these two lines right here, which is likely to lead to a crossover. And then we can calculate, where the crossover might be. And that's if we're under 18,800 bucks, basically. And we're $18,835 right now. So very close to a crossing down, right? Very close to that volatility, continuing to push down. Now it could just consolidate if we can hold above, 18,800 on the CME chart for Bitcoin, right? The professional exchanges. But if we get under 18,800, probably just continuation to the downside until the volatility move is closed in 1 day, right? So maybe let's just wait another day. The 2-day on the 24/7 exchanges also has a pretty clean restart on its signal here. And so we're going to see a new era for sure. But on the 24/7 exchanges, we already are crossed down on the 2-day. Oscillators pointed down. Losing our RSI. ADX not in our favor. So, well, this one closes in 3 hours. This 2-day closes 3 hours on the 24/7 exchange. So the CME chart, the professional exchange has another day to go, but the CME chart, pardon me, but the 24/7 exchanges, They're going to close in 3 hours. So we can see if we close here, that's going to be fairly bearish, guys, right? Closing the 2-day in a very bearish posture. Then we might see the expansion on the volatility on the 2-day on Bitcoin, perhaps having continuation to the downside, or we're going to look for some type of divergences, those type of things, okay? So that's a follow-up for tomorrow. Basically, not looking great, and probably it's best to wait a day to just figure out how the market's going to sort these things out. So let's look at Ethereum. Ethereum, you can see came down to the line that I had drawn out there, right? Just kind of retraced it below its momentum zone on the 2-day, below the 4 on the 2-day, definitely, below the 9 and the 4 on the 1-day, on the 4-hour, below the 4 and the 9. I mean, this thing's on every time frame. Ethereum is bearish, okay? Now, often, but it is at support, so, that often comes with a little bit of a bounce, but it's just way under its momentum zones. Let's see if anything changed here. 1312. Yeah, this lowered just a bit. Basically, right where we are. Yep. So that's basically corresponding, right, to our support that we have here. We've basically had a couple bounces off of this area, and so if we can maintain this level, then there's the possibility that we could expand to the upside, just like what I was just saying. Get our MACD down a bit. Let's see, 1420-ish. Right there with the 9 EMA. All right, we can recapture that 9 EMA, and we're gonna have our momentum to the upside on Ethereum. Okay, right here on the daily. If we hold the level that we're at, we have hopium for Ethereum. Okay, so we lose this level, it's going to be quite bearish, guys. So we're at 1312 right now. The number that we have to beat is 1312. Okay, like we have to hold 1312 in the next 3 hours in order to have a chance to go up. So Ethereum right on the wire. Let me double check Bitcoin, just because this was quite a wild ride today, so a bunch of these metrics can be just kind of thrown off a bit. Daily Stokes just coming down just a pinch, not significantly. Not significantly. It's basically right at the line that I had already drawn. But the MACD, I mean, they are all in the same region. So Bitcoin not experiencing any change. It's still the white line right here that I had marked out for us, right? So for Bitcoin, the key level to watch is 19,500-ish, right? 19,600-ish. We get above there, we can reclaim our momentum to the upside. Ethereum, key level to watch 1312, but in reality you want 1420, let's just say. In reality you want 1420. You really want to hold above that area, then you're going to capture momentum to the upside. So those are the key levels to watch for these two. Of course, for Ethereum, there's a little extra caveat that you do not want to lose this level because you're going to be in a bearish position. At least Ethereum is kind of holding on to its Stokes, which is better than Bitcoin. Bitcoin is not holding on to its Stokes. So its volatility can easily squeeze Bitcoin to the downside, but Ethereum can't be pressured that easily. Do you understand the logic that I'm saying? Right? So that's the key point. So pay attention to those levels. For Bitcoin, it all resides on that 19,500, 19,600 level. And for Ethereum, it needs to hold this level, and that's a sign of strength. And if it can get over 1420, then that's going to be perhaps bullish for Ethereum. Okay, let's look at stocks. Stocks, oh man, look at this. Ah, man. Oh no. Oh no. We are gonna close, guys. Guys, we are going to close underneath 3,800. What was my number? Look at this. Look at this, guys. Boom, 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 boom. All right. Like, man, the Alpha Fam just knocked this one out of the park, guys. Okay. Look at this. Man, I should be trading stocks. What am I doing in crypto? I should be trading stocks. Almost a perfect accuracy on the stock market, right? Trading that quadruple witching, trading, right? Trading this fake out rally to the upside, missed the top level. That's on me. That's my mistake. I shot too far, right? Aimed too high. But we grabbed this one, right? A little bit front run, but nice play. Came back down, right? Following my line to 3,800. Boom, right? Boom, guys. But that's not a good boom. That is a line in the sand that you do not want to cross. And look at this. It's right on my diagonal. So I thought it would take more time to get there. And so, if that had been here, we would have been breaking down. As of where this candle is, we actually have until 37, let's call it 80, 37.80. And so if the stock market can make a little bit of a recovery, get a little bit of a bounce, basically like 100, right? 100 points there. Get to 38.30 from this current price of 37.90. Just kind of bounce back up onto this green line. Then maybe we can escape this fate. But if we just go sideways and down, sideways, I mean, even if we just go sideways, we are going to end up breaking down. We are going to lose that diagonal support if we just go sideways. We have to go up in stocks, guys. We have to go up. And yet, look at this candle. This candle is disgusting, guys. It's disgusting. And it looks like, we want to drop to hell, okay? So, thought it was going to happen over here. Thought it was going to take more time. But, boom. Dang. That was harsh, okay? That was harsh. Nasdaq, I'm sure, just looks the same. Yep, it's identical. Can delete this circle. Nasdaq has its own line down here. Just make that solid. And same issue basically. In danger of losing that line. See how this is positioned. It might not be perfect. Sometimes you got to ignore the real tippy tops of these formations. Kind of grab these points that it kind of bounces off of. Like, it's like the tip of the iceberg, right? But you actually want to sit on the iceberg. And that's the diagonal it's following. It's not really following from the top. It's following from the support of the top. And so, not sure if we should be pointing it like this or like this, because there is this stray wick down here on the Nasdaq, right? right here. But overall, the price action is grabbing along here, and then it made kind of like a temporary diagonal right here. Which it did bounce off of and tried to again, and it did get resistance on it, so that line is significant. We can't just ignore that line. We are kind of getting wedged between this, these two diverging lines here. But we're at the bottom. We're at the bottom right there. And if we break down below 11,600, I mean, if you just were the most generous possible, 11,300, that's a huge fall, guys, though, right? Like, that's a huge fall. So, like, we don't want to lose this level, right? We don't want to lose 11,600 because potentially we're falling lower, right? To 11,000 or whatnot. So we're already starting to lose some structure here. We missed this line. Now we're kind of having a backup line. We have another backup line and another backup line. And then we have a whole bunch of backup lines. But we can easily just chop through this stuff. Same way we kind of grind it up. We can kind of grind it down. So we'll see. Can we catch a bounce or not? What's going to give us a bounce, guys? Like, what's going to give us a bounce? Is there any good news? We have the Russia thing. I may do a free speech Friday on the Russia issue, by the way. Like, I feel like I have a rant in me that needs to come out about Russia, okay? It's just trying to prepare you in advance, okay? I know some of you guys don't like politics, but unfortunately in this world, politics and economics are tied together. That's why economics is a social science. Economics is in the humanities department, okay? Economics is in the same categorization as sociology and women's studies. Okay, they're all in the same departments. You understand that? Economics is a social studies. Why is that? Because it's literally just the faith of people, right? Of idiots, largely, right? The faith of them in these various different systems that they're constructing based upon human, like really flawed, imperfect, dynamic humans who are ran by emotions, essentially, right? So I'm going to need to clean up the stock market chart here. This area is no longer valid as support. Best we can do is over here. We lose that. We're going down. Same thing for ES, right? Lost that area. Best we can do is consider to get this area. And we lose this one going down. Move my boom over. Let's see how the dollar's doing. Oh, yesterday we were saying just how bullish the dollar looked, right? People are saying this looks like a BART, it's going to come down, but it was just bullish AF, as I mentioned. And what did I say? It was gonna likely hit that 111. 111, guys, it was gonna hit. Boom, boom, 111. And then what's the next big boss for the dollar, right? 114. And at 114, it's going to essentially have retraced this parabolic growth that it started to break down from. And it, just a hypothetical limit would be a 118 in my mind. 114 is possible if it can chop through this diagonal. Yes, there is a diagonal limitation on this thing, okay? Like there is some type of area here. What the heck? Did you see those lines like dramatically shift? That was weird. TradingView needs to get on that. Something's a little bit off there on the different time frames. So you see price action is not touching this line here. But on the 4-hour, it's touching the line. That's not good. TradingView, what are you doing, TradingView? This makes no sense. Guys, if I have a line marked out on TradingView, right, and the price action is wicking to that line, on every time frame, it should wick to that line. Right? Look at this. What is going on here? This is Look, here's the dashed line, and then here's the solid line. It's in the middle. Let's go to a higher time frame. Here's the dashed line. Here's the solid line. It's underneath the dashed line. What the heck? It's not in the middle. It's underneath it. I go to the 4-hour. It's touching it. It's touching the top solid line, and the dashed line is way below it. What the heck, TradingView? This is garbage. You can't use TradingView. You can't use TradingView reliably if this kind of nonsense is happening. I mean, I'm gonna have to write a complaint about that. This is a very serious issue, guys. This can mess with your levels. I mean, if this type of thing is happening on different time frames, then where you draw a line to set an alarm, right, to take your profit or to enter a position can be completely off. So, public service announcement, something weird is going on with TradingView's lines, and this is not acceptable. I mean, this is not acceptable at all, okay? On 3 different time frames, my price action is touching the top, under the bottom, or in the middle. Like, what the heck? That's not acceptable. Wow. I mean, we pay a lot of money for the professional version of TradingView. And so if you're paying for these, upgraded versions of TradingView, you shouldn't be screwed over like that. I mean, that can cost people thousands of dollars, that type of error. So, yeah, I mean, glad I noticed that. I mean, can I trust any of my levels now that I mark out? Man, sometimes I'm wondering why these lines are like jumping around. And it makes sense now. On different time frames, they're being calculated differently. That is just messed up, okay? That has been throwing me off this week. I swear, this error, whatever's going on, has been happening for like probably a couple weeks, and just nobody's noticed it or something. But that's horrible. It's horrible, TradingView. I'm going to be writing a nasty letter. I may even just call in. I mean, that is very disturbing for a trader, okay, to have your lines jump around like that. That's not acceptable by any means. Let's go over to the VIX. Wow. Yeah, we got a nice spike entering the gates of hell here. Tapping on the door, coming back a little bit, but still pushing up towards the gates of hell, right? So we'll see how this goes. Looks a bit ugly. We could get another reflection off of the top of this trend line, the downside. Maybe some easy trading coming up if we can kind of tag this volatility here. Not really sure how volatility is, calculated in the markets, how it's traded, in the markets. But, it follows these trend lines. So conceivably, if we tag this trend line here, then maybe we could have some easy trading on the downside until it perhaps swoops back up, contacting the bottom. So let's look out for that. That's why it's important to look at these things, right? That's why I look at the VIX. It's very interesting. USDT. Let's see if USDT is suffering from the same issue that the DXY chart was having. Let's look at the 4-day. No. Touching. Let's look at the daily. Touching. 1 hour. Touching. Well, just let me zoom out a bit. Touching to the 3 hour, 2 hour. Okay, so it's working on this chart. That's weird. Yeah, so it looks like it's a random error in TradingView. So my USDT chart is working fine, but the DXY chart is just god awful. I mean, it's changing on every single time frame, which could royally screw you over, you know, if you're depending on certain lines. So that's not good. I mean, having a random error like that, that's not good. You know, these lines sometimes change if you're on log scale versus linear. So I'm wondering if TradingView's calculation for how to draw a line, if the line is drawn on when you're in log scale versus when you're in linear, I wonder if it holds some type of proportional relationship to the chart in log versus linear. And then, you know, I wonder if that matters. Let's go back over the DXY and just take a look at that. So horrible, man. Let's see. Let's put it on log. Let's see if on log, if it's basically under this dashed line on all time frames. Oh, 4 day under it. Daily, right under it, tagging it, right? Let's see 1 hour. Aha. Got it, guys. Basically touching it, right? So under it, touching it. So on every time scale, this diagonal line that I had drawn is working perfectly as long as I'm on logarithmic. But if I'm in linear, basically the normal chart, then it's different on every time frame. So log is working fine. Maybe it's just some temporary issue based upon log versus linear. Gonna follow up with the TradingView on that just to see if I can help them troubleshoot it. But anyway, guys, what can I say? USDT dominance looking bullish still. So people are getting out of crypto. I mean, this thing can just chop around up here, right? There's a lot of room for this thing to play in this area before it necessarily breaks back down, you know? I mean, we've essentially opened up new territory up here. And if you look at the way this chart expands, I mean, we could make a conservative projection. Let's see, where are these things radiating from? Let's do this. Let's do this. All right. So we have a hypothetical origin line here. And since we do have a breakout on the top line of our USDT formation here, let's use that as a pivot point for our radiating line. Bring it back to the origin. And there we go. We have a hypothetical max limit, a hypothetical trend line using just 1 point. And then a projection based upon 2 other points, okay? 2 other trend lines, rather. And so if we do break up into this area, right, just bullishly, we could maybe consider that this would be the height of the market before ultimately things start to basically enter a bull run. You can see that, you know, we've done things like this in the past, right? Very similar formation going on here. Very similar right here, right? Kind of exaggerated that. It breaks up, comes back down, finds some support up there, and then pushes up on a diagonal, right? And then it chops all the way down. And then it chops all the way down. I could hypothesize that something like that is going to happen, and then it chops all the way down, right? And that would be, look at that, look, that would be approximately, probably no sooner than the end of spring or in spring to summer, right? Like somewhere in that area, 2023. So I'm just hypothesizing here, guys, that if price action comes up to this, let's make it a hypothetical line. What's a good color for that? Make it yellow. Just a hypothetical line. There's no proof that this is going to be any type of trend. This doesn't have to come true. Just making stuff up, right? There we go. That's a nice hypothetical trend line. If we come up to this area, right, and we have a kind of a breakout of that red line and use it as support, then what I'm going to hypothesize is that we're going to max out around somewhere around 10 to 11% on USDT dominance. And then from there in 2023, we are going to chop down the same way that we chopped down here, same way we chopped down here, same way that we chopped down here after doing pretty much the same thing. We even have a mini formation just like that. And that this is going to be our bull run, guys. I mean, this thing could go for a while, right? Like it doesn't have to do it like here. It could do it like a year later, right? There's no time limit on how far this thing can go. But if you can kind of see that there's a little bit of a trend on the width of these things based upon the magnitude of them, then you can imagine if this one's twice as big as this one, then we might have about, 2 times the width on it, because there's probably some type of proportionality to these things. And so maybe end of spring to end of third quarter 2023. That's what I would predict. Getting a little bit crazy here with the lines. And then maybe the end of 2023, we start to pick up into a real bull run. Doesn't mean there can't be some type of relief rally, some type of mid-cycle, rally that's pretty significant. Like we could have a nice run, right, between now and then. But I really wouldn't predict that this type of formation, this type of topping formation on USDT dominance, it's probably going to take, a solid year, half a year, best case, a year, most likely, right? Could overshoot or undershoot depending on politics. See what our coins are doing. Let's go to the 4 hour. Zilica, wow. Yep, just like what we said, boom, like reclaimed this candle drop here, this candle wick. I mean, this whale knew, okay? Like this whale set the tone. When they dumped all of their stuff and it got bought up really fast, man, those people got screwed. Whoever had purchase orders down here, you got screwed by those whales. They gave you a chance to get out, and then everyone got out, okay? Like the guys who orders triggered down here, They had a couple days to think about it, and they thought, you know what? But might as well just take my profit on this move and get the F out, and then we're even lower than we were before. Okay? Attempted to get back up, did not hold above the momentum zone that I marked out for us. Look at that. We challenged the momentum zone, just like Bitcoin, right? Just like ETH, but we failed to close above it. And so what happens? That's very bearish, right? Very bearish. ADA's holding up pretty well, to be honest, guys. It is kind of challenging and breaking down from that rounded bottom that I had talked about, which does suggest to me that it might want to retest the bottom of this range. So we'll have to see. But ADA does have a little bit of a buffer that's built in because it is following this rounded bottom quite nicely. It has a little bit of room, to go. And so that's nice to see. Just want to, but I preferred it to be above this yellow line and preferably above this diagonal up here, okay? Which is also going to correspond to its momentum zone. So again, guys, like these momentum zones that I mark out, like it's no joke. Like, they're dynamic, so they move every hour by a few bucks, right? Or by a few pennies, by a few bucks, they move around. And if there's some wild, crazy move, it can move significantly, yes. But overall, knowing where that zone is, like you can pretty quickly see whether you're sick or not, right? Just remind yourself. And then you throw on your EMAs for whatever time scale you're on. You're underneath the 9, you're underneath the 4, then you're sick as a dog, guys. Like you're underneath your momentum zone, and you're underneath these EMAs on whatever time frame you're trading, right? Like there's a reason why I mark out the weekly EMAs, like that's the thick blue lines, and then the momentum zone for the daily. And then, if we're trading like on the 4 hour or something, then we have lots of time scales to see just how sick we are. We're sick on the weekly, sick on the daily, sick on the 4 hour. No point in going long, guys, right? I mean, you're going to have to look for the perfect setup, perfect indications, agreeing on all time frames that things are turning around. Because otherwise, I mean, yeah, it could bounce, but like that's why we have the zone up here. Like it could bounce and recapture it. But it just you don't want to necessarily take the long play unless you've recaptured that daily momentum. Like that's you don't want to play the long play unless you're over the 9, right? Preferably sitting on top of the 21, right? About to squeeze up. So Cardano, I mean, doing its thing. Looking pretty stable, honestly. The last low was right here. It didn't take out its low or anything. It's just going sideways. KDA? Ugh. Ugh. KDA losing support. That's what I was saying might happen. Looking pretty ugly there, guys. Yikes. Yikes. Wow, what was that? Look at this. Look at this Darth Maul candle here. Blade to the upside, blade to the downside. What was that? 12%? Nice. Nice. Breaking down from support quite clearly. Quite clearly. Last attempt to try to save itself. Breaking down. Guys, I don't see anything until like 110. Like I don't like KDA at 137, guys. I like KDA up here above $1.55. Okay. I mean, yeah, it has this mid area also. Okay. So $1.48. I like KDA at $1.48. Wow, look at this. That was a perfect back test to this breakdown from that 148. Boom. You know, it's like the guy who's trying to save himself. He's like drowning in quicksand or something. And like he's reaching out for somebody, but nobody's there. Boom. Just head underwater. Just drowning. I don't see anything until $1.10. I mean, you got a little thing like right here. Something right here. Yeah, so we just have like little teeny tiny minor supports at a 132, 126, 120, right? So we could get little tiny baby bounces on those things. But if the momentum just continues to the downside, it's probably going to just chop through that stuff. Again, it's not significant. Like those things aren't significant. Even this isn't that significant, to be honest. Kind of like grasping at straws, to be honest here. $1.11. There's this wick, this kind of like origin wick over here. Some type of shelf being created between this area. Lots of wicks here. Nice shelf right there. So $1, $1.10, probably could find some type of support in there. Otherwise, 89 cents, 90 cents, right? 70 cents. Just kind of getting ahead of ourselves at that point, though. So let's see how KDA does. CRV, wow. Okay. Gonna try to take out this area. I mean, that's what I said. If you don't recover, if you don't hold the top of this wedge here, and then on top of this 128, like this next zone, right? Then what do you have? Just a space. You know, I mean, we're basically using this zone exactly how I have it marked out, right? Resistance up here. You see resistance, 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 resistance. Drop down. Just kind of chopping around in this area. Lose it, right? You lose it completely. Boom. Come down to this area. You get some support off of this area. Boom. Chop around up there again in that resistance. You lose this area. You can basically just see this as like one big test of the breakdown, right? And then boom, coming back down into this area. Like that's the bottom line. I don't know if you can see it, but there is just like a little dashed line here. Just make it white. There you go. So I try to keep those less important lines just a little bit of a darker color, so it's not too distracting. Because you can see we can fill up this whole blue box, right? Like we've done it in the past. Just you can see there's a little bit of an interplay right there. And so that's what we're bouncing off of. If we come back down, probably we're going to chop around there again, and then maybe to the bottom, like 34 cents, something like that. You know, sort of like what we did here. Could be 42 cents, could be 57 cents. But this thing feels like it wants to come down. We'll see. Flux. I mean, a nice effort by Flux, okay? Like I did have an update on my website that said that or on the video that I posted yesterday, which said that I had to adjust Flux because it had such a 40% drop so fast that its momentum zone did change quite quickly. That's what can happen when you have a huge drop like this one right here. And so I did bring it down, and I said we had to recapture $1.02. Wasn't able to do it, so we got rejected. And then the next significant levels I see down here, that 70 cents to 60 cents area. we could have a little chop in between. Anyways, guys, that's your alpha for the day. Stay safe and happy trading.